Intelligence based in Cyprus, and Albert is based in China. So thank you, gentlemen, for joining us, and hopefully we'll be joined by Kate Durian later on in this podcast. A lot to talk about. We've got the headlines there on our news bulletin. Continuing to see everything roll through the market, and all the headline news hitting energy and hitting energy prices. Rafiq, let me start by inviting you to give us a few comments on where you see the markets at right now. We've got Europe meeting this week with the US again to discuss sanctions and further measures on Russia. Obviously, that we've seen what impact that's had so far on the markets from a sentiment point of view. But Rafiq, what's your take on, physically speaking, on Russian oil? I mean, we haven't seen sanctions by Europe yet. We put on Russia energy sanctions, and we may not see that. But how effective would they be if they were put on Russian oil?
Well, I think we're already seeing exports slow a certain amount. I think what we saw, if you look at the Kepler data, when the war started on Feb 24th, there was this like freeze. And the market got spooked, and you saw that massive surge right to $130 a barrel for Brent. And then, weird enough, from March 1, you're actually seeing quite a lot more Russian oil, in crude terms, more than usual for like the first week. And incidentally, this coincided with what seemed like quite strong flows from both Saudi and the UAE. So I think supply, to a certain extent, leaving out other factors, certainly explains a little bit why we had that dip back down to 100 or so in a week or so ago, and then even if we were to see Europe actually place sanctions on Russian oil. I mean, the US has done so. It's not going to have a big impact on the US itself. If we were to see official sanctions, I mean, is that going to just shooting themselves in the foot, really, or would it not? Because, as you just said, we'll continue to see Russian oil leak through some means into the market. I can't see how it wouldn't have a big impact, unless they were a joke, which I don't see why that you'd impose them if they're a pure joke. They might be doing it to signal that this is that they can and ease off once the pain started becoming more apparent. But if things are already bad for Russia, if they impose sanctions, things would get worse. I mean, that's pretty clear. I mean, clearly it depends to a certain extent on how they're enforced. But the outlook's very bleak. It's very jittery. I don't see, if were that to happen, we would be getting less oil, and you'd see prices going. I mean, the market cannot accommodate an outage of that magnitude, and we're seeing other outages, which maybe we'll come on to later. It's not
and I would want to come back and get your thoughts on OPEC as well, and Iran, of course. I mean, in terms of extra oil possibly coming on the market and seemingly maybe calming things down. Albert, let's go to you and talk about China, and let's look at the demand picture. We're going to be flipping back from demand to supply, but clearly, on the demand side, China, in terms of outlook for growth this year, in terms of the impact of this inflation that we're seeing now rampant, really across the board, a very sensitive point to the Chinese government always. So what's your outlook in general for the Chinese economy this year, and how much panic is there in the government because of these inflationary concerns, whether it's on energy or anything else?
It's a broad question, Diala. Let me start piece by piece here. The government is setting its own target of about 5.1% GDP growth for 2022. The banking industry has taken a bit more conservative view, 4.8%, but those two numbers aren't that far apart. That's a drastic difference from prior year growth, particularly right up to the start of the epidemic. So there has been a sea change in economic productivity in China, mostly driven by the pandemic. And China's very harsh approach to controlling that pandemic by curtailing economic activity across the country in 2002, and then particularly in the Shenzhen, Hong Kong region these past weeks. There's not an acute sense of panic among the population per se, but some sectors, we've talked about this on previous segments, particularly property development, are getting stung badly by government policy changes restricting speculation in property in China and restricting ownership to certain subpopulations by province. So that has led to the crisis that we're seeing today in, I guess, the poster child is Evergrande Corporation, which suspended trading in its own shares on Monday, facing a $2 billion debt interest payment today, and I think another 1.3 billion in 30 days. It would not be unlikely that Evergrande would maintain that suspension for the next 30 days on the assumption perhaps that there are covenants in their lending agreements that require a certain debt service cover ratio, and better for them just to freeze their equity where it is today rather than risk a further decline in their equity values. So that's kind of an example of the real estate market, which is far more broad-based in its pain today than just Evergrande alone.
And only as a follow-up to that, Albert, just to get you on that, I mean, there's been some talk recently from analysts we talked to, is that it's the whole real estate fiasco in China and Evergrande being the sort of prime example, but that now, China is really considering possibly turning around its COVID policy, zero COVID policy, because real estate issues aside, it's got other problems as well, and it is seriously considering now turning around its COVID policy because of what impact that's having on trade and on inflation. And that is really, again, I come back to my first point, a bigger concern for it than its real estate sector market.
Well, it's an economic decision, isn't it? I mean, all political decisions are or should be at their core economic decisions. And China's policy up until now on zero COVID has really been designed to limit the internal damage on healthcare costs from the pandemic. Now that it's having a broader effect on overall economic output, economic activity as the world moves on, China is facing a dilemma of its own making, by the way, because China did a very good job 2 years ago in rolling out 2 of its own vaccines, right, for the original variant of COVID, but now those vaccines are of limited utility against Omicron. Right? And the population, therefore, it is seen as being susceptible to a large spike in COVID if the government does not maintain strict policies. So there is a tension now in China which wasn't there a month ago. You can now see the conversations taking place in the street and within government in particular, and in the healthcare sector, that it's time to consider how and when China is going to move off of its zero tolerance policy and move on to a footing which is more compatible with the strategy that the rest of the world is taking.
Rafiq, just back to you on supply. Let's talk a bit about OPEC. There's nothing new from what we can see. Again, Saudi reiterating this week very clearly that it's not going to be increasing production and it should not be called on to do so. What we're seeing today in oil prices is not its problem. And the other point that Saudi Arabia has made very clear in the last month is that Russia, it will remain a very important part of the OPEC Plus group, despite what we're seeing obviously on the geopolitical front. So, what's your view on that? Saudi's obviously being quite clear about that. Is that a geopolitical statement, or is it to do with the fact that they believe that fundamentals are still not too tight and that we're okay to continue monitoring?
Yeah, the fundamentals are all over the place. This is purely geopolitical and long-term strategic. Yeah, this is all about the energy transition. I think way back in 2015-16, when OPEC Plus was created, the driver of that was Riyadh realized that OPEC to be effective to manage the energy transition needed more market clout, and Russia gave that. I mean, basically, OPEC Plus is Russia. Russia is kind of Saudi's energy transition survival strategy. So they will resist an awful lot of pressure to keep Russia in this alliance. And I think, you know, Russia's seen the value of the alliance too. You know, it's a pretty isolated. It's very isolated at the moment. When you look around, who's offered some support or something that's internationally that's gone its way. I mean, you look at like a few crumbs of comfort from China, some support, some crude purchasing, and OPEC Plus. I mean, it's the only thing where you can sort of stick two fingers up at the West and say, oh, you don't control everything. So,
Yeah.
you know, similarly, Russia needs this alliance too. So if it can be managed. And it is an if, because pressures are mounting, you know, and if it gets uglier, the pressures will mount further. I mean, I think increasingly the US and Europe are going to realize that high oil prices are benefiting Russia and also just hurting their own economies. And OPEC Plus has OPEC Plus stroke Iran stroke supply has a very big part to play in that. So they're going to take back.
I'll come back to you on Iran, but Albert, just to go to you on that point of Russia and its any friends that it has left in the world, and of course China. Give us your take on that. It seems to be, you know, holding its cards close to its chest for now. But from an economic point of view, an energy point of view, you know, how is it going to make up its mind? Who to side with, if you like?
Well, there was, you know, the start of the Olympics, a clear expression of brotherly love between China and Russia that hasn't manifested itself actually in action so far. China is still continuing to support Ukraine with aid as it can be enforces its own outlook on sovereignty and the value of sovereignty. So the request or the expectation by Russia for support from China is not materializing the way they wanted it to or expected it to. And China has shown more of an inclination to put its attention on its trade ties with the West, with the US and Europe. There's talk of China has had a kind of a long-term aspiration to compete with the US dollar, to put the yuan renminbi on a footing as an alternative mechanism for trade with the US dollar. And the Saudis have been discussing possible UN settlements with China. Russia has been discussing UN settlements with China. But with the decline in the Russian ruble since the war broke out, that doesn't seem to make sense anymore, and doesn't make sense for the Middle East as well, Saudi Arabia, to settle in yuan and have a large overhang of yuan, which only serve really to support trade with China. So there is the immediate outlook, I would say, for the Russian economy, provided, it continues, as long as Europe continues to purchase crude oil from Russia and pay in hard currency, that will continue to support their cause. But if the Europeans begin to fall away, the EU through EU decisions, then it's going to be a pretty bleak future.
Yeah, I mean, let's talk about Europe, Rafiq. Back to you. I mean, everybody now is saying, we've got a recession coming our way in 2022 for Europe because of inflation, essentially, and certainly on the energy front. I mean, maybe oil prices are historically not that high, quote unquote, but gas clearly. Gas prices are proving to be a big challenge, and of course, Russia being a big supplier of that to Europe. So again, back to that, how vulnerable do you think Europe is, and how can it then, move forward with these geopolitical decisions it's taking, given that it's really hostage to these gas prices?
Yeah, I think basically European politicians completely underappreciated their energy vulnerabilities. I mean, it should have been clear, it should have been obvious. it wasn't, and they should have done some stuff before. I think they themselves.
Immediate solutions on the gas front. I mean, the LNG thing has come up a lot again with
it's not possible
etc.
It's just not possible to replace that kind of supply. And FYI, Qatar is down to a certain extent. We still got 2 trains in maintenance, so those problems aren't going to go away. And obviously, there's a threat to Russian gas supply. You can't just switch it on and off. And throughout the market, it's like a nightmare on Wall Street. We're getting, it's not just Russia, we've got the CPC Kazakh interruption. That's possibly 1 million barrels a day for a few weeks. That's just hit. We've got Libya going on and off. We've got the Qatar issue. So it's all, we've got West Kurna 2, 400,000 barrels a day out in Iraq. So really, spare capacity limited Saudi Arabia and the UAE.
And even they're not putting it on for the time being. Okay, let's talk about Iran then in terms of spare capacity or extra capacity. That looks like we're nearing a deal. What's your take on that? Are we there this time?
I think we were, and things keep on happening to stymie it. And I have to say, it's a wonderful country, Iran, but I would say the Iranian policy on negotiations is never make a deal unless you're 100% sure you're getting the better of it. And I think they've seen the advantage and they pushed a little bit too far, and it keeps on not happening.
Albert, what's your take on that from a US point of view? Biden internally is getting pretty desperate to kind of prove himself in every which way. Clearly, it would be in his interest to get an Iran deal signed, and he is willing to compromise a bit. What's the US take, do you think, on that?
Well, it takes pressure. It takes a little pressure off of the supply-demand equation to have an extra 1.4 million barrels a day coming into the marketplace in the next 2 or 3 months. At the same time, the demand from Iran to back off of the 2019 executive action on designating the Iranian Guard as foreign terrorist organization is not playing well politically in the US. And that's going to be a very difficult obstacle to overcome. There is a lot of support for maintaining that designation until Iran actually shows through its actions its intent to moderate its activity in the Middle East region. Also, with the US kind of backing away from its former kind of deep relationships with Saudi and the UAE and Kuwait and others, there's growing distrust of the US intention. And for the US to simply dismiss the 2019 decree on the Iranian Guards would be another indication to those countries of the US moving away from and giving less attention to their interests. So if that's going to be a sticking point in these negotiations with Iran, then it will be a sticking point.
It's getting, I mean, just as we're getting close to a deal, there's always something, but it is getting, the Middle East Gulf US relationship is getting a bit complicated now, and certainly coming to the fore very transparently. What about, Rafiq, back to you, just back to the supply equation, US output, shale, again, clearly seeing prices favoring reinvestment into that, and the forecast is we're going to have high prices all year. So, but yet not really a flood of US production expected to come on stream in the second quarter yet. Do you see that shift taking place?
One would have thought so, but it's just not happening. One would have thought so for quite some time. There's no doubt they got, the industry, the bank, the financial sector has got spooked, A, by the poor returns they got during over shale's lifetime, and B, by the energy transition. And I think it needs some clear, the only thing that's going to unlock investment is a really clear commitment from the administration. And I think it's got to walk back some energy transition goals, at least temporarily. How it does that?
Wasn't Biden sort of beginning to indicate that this week?
But clearly not enough. And there's some genuine bottlenecks in terms of rig mobilization and the time it'll take to. I mean, they basically used up the inventory of easy wells, and you know what to get more production, there's going to need some serious investment. So that's also clearly a restraining factor. But with prices how they are and the outlook how it is, even if there is a solution to the war, one would have thought that. Yeah, the US needs to be, for its own sake, it needs to be a strong oil power as well as a geopolitical power, and I think the two go together. And I think it's shooting itself in the foot if it doesn't. I mean, clearly there's a energy transition considerations to take into account, but yeah.
And there's an argument as to whether those have been strengthened or weakened really as a result of the crisis we're seeing now, even since last winter, if you like, when gas prices were already going up in 2021. Just look at our poll question. What impact do you think sanctions will have on Putin's decision to end the war in the coming months? So, you know, we've got pretty stringent financial sanctions hitting the Russian economy and more to come. Will that impact his decision to withdraw or to stop? There you go. So from none to significant of everyone, and we'll have a look at that result in a few minutes. Albert, just to go back to China in terms of oil imports, you know, and its projections for what oil it might need. You know, what's your take on that? We've seen that they have been, you know, using up their stocks and reserves in the last year as prices have crept up. But again, from a refining point of view as well, we're seeing a lot of pressure for supply on products in Europe as well, refined products. And of course, China has a big refining sector itself. So what's the outlook for that, given where oil prices are at? Do you think it'll still, you know, play the waiting game?
Well, no, exactly right. It's a waiting game. They'll continue with the current production refinery schedules. There seems to be, you know, a fairly stable demand domestically for motor fuels and transportation fuels, particularly jet fuels. The higher demand that would arise from kind of an international growth in international trade hasn't materialized yet. So transportation fuels for ships, airplanes, you know, motor fuels remains pretty stable now. And the refineries are keeping up with demand. I haven't seen any pressure on that side.
Rafiq, a lot of headlines on diesel prices and diesel shortages in Europe in particular. You know, what's causing that, first of all, from your point of view? And that, you know, there does seem to be more panic about product prices than crude prices at the moment.
Yeah, I mean, okay, so certainly initially the signs are that Russian product exports have been hit more strongly than the crude flows, and you know that clearly sort of explains that. Where Europe goes, it's hard to say. It's a really big balancing act. I have to say, I think Putin made his decision to go to war a little bit on the assumption that Europe's energy vulnerabilities would mean that it would not take a firm stand. And so, you know, Europe's surprisingly tough response was one effective way of sending a message like, no, this is not how it works. But on an economic level, this is, yeah, you know, everyone's talking about recession.
And I mean, okay, and let's, Albert, back to you as we begin to wrap up. Let's talk about sort of macro policy as well, in terms of the Fed, and it took its obviously first step in the US this week to do what it said it would do, which is start to raise interest rates, and it's indicating that it will continue to do that despite these fears of possible recession, whether it's for the US or for Europe more specifically. That seems to have obviously lent some support to markets, actually confidence, if you like, back into the equities markets. And but well, you know, again, you know, in terms of the US economy, I know you're based in China, but I'm sure you keep up with
all my money comes from the US.
Yeah. What, you know, how do you think that hawkish, sort of confirmed hawkish stance is being interpreted there in terms of the outlook? The US economy is looking pretty good.
It is, but the Fed, yeah, there's inflation, right? The Fed is in uncharted waters. The Fed has never had such an association of factors converge at the same time in its policy making. Right? A war, short-term event, international pandemic, inflation, etc. This created a new ground for decision making, and there seems to be a very strong sense in the Fed that short-term interest rate increases are coming by way of 25 basis point tranches, perhaps 50 basis points, which would be a real game changer if that would occur. And there is another argument that the Fed might actually overreact if it were to introduce those interest rate hikes because of the uncharted nature of the pressures that are currently exerted on the economy. So there's almost no winning in this situation. If you're the Fed, you follow the advice that you think seems best for the economy, and you hope you're right.
Rafiq, in Europe, the ECB quite recently, and even before the war started a month ago, was indicating, it's not necessarily going to continue to follow the US Fed's line, if you like, and they'd be happy with zero or negative interest rates, much more. And clearly now Europe's much more vulnerable to that. So again, I know it's not your area of specialty, but where do you see that central bank policy going in Europe? Just before you answer, we'll just look at that poll result before Irene takes it off the screen. Moderate, okay, sanctions will have a moderate impact on whether Putin ends the war. But moderate to significant is getting more than none. So there's some hope there that may eventually impact. I suppose it depends on how strong those sanctions get. Rafiq, just back to you to close on that in terms of the macro policy in Europe, again, of central banks and whether they'll be more cautious.
Yeah, I couldn't comment really, but just to state the obvious that inflation is going to is going to be the key driver in any decision that comes out on that front. But yeah, it's not something I've looked at.
And just to get your take, Rafiq, on Russia, on IOCs that have been withdrawing from Russia, withdrawing their equity, declaring they're going to at least. What impact do you think that's going to be long lasting? First of all, do you see them, Total, of course, being one of those which hasn't declared that, but do you see that withdrawal from Russia having an impact again on Putin in terms of pressure?
Psychologically, it's enormous. I mean, this it's like essentially in terms of economic engagement. IOC investment in Russia was the big thing post the fall of the Berlin Wall. So yeah, psychologically it's massive. Historically, for the oil industry, it's massive. A lot of these companies were born out in Russia, and unprecedented. How long lasting is really going to depend on the war. I mean, we've made some initial inquiries. And apparently the BP and Shell, in terms of actually taking any action on their announcement, have done diddly squat, absolutely zero. This is not necessary. It doesn't necessarily mean that it's just pure virtue signaling. Obviously, this is not a good time to dispose of Russian assets, to say it mildly. So I think I don't see any way where we can have a solution to this crisis unless Russia gets some sort of reassurance that A, there will be sanctions lifted, and B, there will be a rollback of these investment withdrawals, and C, that it cannot keep on selling gas to Europe to a certain extent, oil and gas to Europe. Otherwise, he's facing economic ruin as a country. I mean, you might as well.
But equally, Russia will need to give its guarantees that it won't, once these sanctions are withdrawn, if indeed they are, that it won't go and do the same thing all over again. It's tit for tat, but we'll see. Hopefully a diplomatic solution will be reached soon, and it's hard to believe it will be, but that seems to be the only hope and fight.
Yeah, long term, I see some of these investments continuing. Some of them to a certain extent, but clearly in terms of trust and partnership, ooh, that's gone. That has gone.
Yeah.
And I don't know how you can get it back.
And talking about trust, Albert, we had Narendra Taneja, who's a renowned speaker from India, on our program yesterday, and he was talking about the level of mistrust between China and Russia, or the fact that they're seen as sort of in the same camp on certain fronts, but actually that the mistrust between the two of them is very, very deep. And he was warning against the fact that we're pushing them together. But sorry, if we can just see that poster up again, Irene, just to tell our viewers, we're playing an interview that was done with a former executive at SOCAR in Azerbaijan, and again he's talking to us about how Central Asian states, Kazakhstan, Azerbaijan, etc., how vulnerable they might be to this whole event that we're seeing in Europe now, and what an escalation in tensions would mean for supplies from those oil and gas producers. So very interesting take there. That'll be playing in an hour or so. I would encourage you to watch that interview. So thank you so much. We've run out of time. I'm sorry that Kate couldn't join us today, perhaps next week. Rafiq, thank you for joining us for the first time. Great to have you with us, and hopefully see you again. Albert, always good to see you.
Thank you, Jill. Very nice to see you again. Rafiq, pleasure to meet you, sir.
And yourself. Thank you.
Thank you to our viewers. All the best.